and we're a few minutes in now, so I want to make sure that we start. All right, so thank you all so much for making the time. Today's schedule is a quick intro, top Dasher questions answered. So some folks have already written in with questions. Some of the ones that are already in the chat we already have, so we have answers prepared for you guys. How to get discounts on filing taxes. Everlance and DoorDash have a few partnerships you might want to take advantage of, and additional resources. So introductions. My name is Alex. I'm the co-founder and CEO of Everlance. So I'm an entrepreneur. Came from a family of folks that were self-employed. My dad was a writer. My sister was an actress in LA, so did a lot of mileage tracking. And we built this app. We built Everlance, and it allows you to automatically track your mileage and expenses. We're really proud of the product we built. It's the highest rated tracker for both iPhone and Android. And DoorDash is a partner of ours. So that being said, if there's something that you don't like about Everlance, I really want to hear it. So, feedback for us is incredible. We think of it as an opportunity to improve things. So if there's anything within the app that you find, adds friction, is annoying to you, things that you think we can improve, please write it here. Email me. I'm alex@everlance.com. We want to add that to the product roadmap. So like I said, this really isn't about Everlance. It's more about how to do your taxes. But our app allows you to do your taxes more easily. The way it does that is it allows you to automatically record all of your business expenses and revenue. So the way it does that is it has GPS tracking for your mileage. Like I said, mileage is a really valuable component. And then you can add receipts to the app or link your credit card to manage expenses and revenues that way. So without sort of too much more, I really want to introduce you to our tax expert. Our tax expert is, his name is Yotam. He's very qualified, and I think we'll have a great session today. And with that, Yotam, why don't you tell us a little bit about yourself?
I'm a professor of finance and accounting at Boston University. I've been teaching finance and accounting to graduate students for about 4 years now. Spent about 10 years in the field. I also own a tax business, and I focus specifically on independent contractors. I like people that have a 1099 miscellaneous, and I enjoy the way they can actually take advantage of being an independent contractor in order to lower their tax rates. It also creates a different situation with the financial aspect because it requires a lot more responsibility than if you just have a W-2. But in general, independent contractors have an extra level of financial need and tax needs, and Everlance and mile tracking is one of the most important aspects of it. I volunteer with Boston CFA Institute in Financial Literacy. One of the classes that I've been teaching for 5 years now is actually undergraduates for personal finance. And in it, I ended up writing a textbook about financial literacy. The 2 chapters that I added compared to other books were actually in the tax area, where one of them was just a general tax chapter, and another one was a chapter for people working in the gig economy. The gig economy is one of the bigger areas, and it's very important for people to understand how to deal with the financial implications when you're involved working in that field.
All right. Get to some of the common questions. Some of the questions that are coming through on taxes that we might want to answer now as well is what to do if you don't receive a 1099, and what to do if you didn't record mileage and you want to add them retroactively. So those are just ones for later, but first question is, what is the difference between being an employee and an independent contractor?
Okay. When you're an employee, you basically, what happens is you receive a different tax form than an independent contractor. The tax form that you receive as an employee is a W-2, and an independent contractor gets a 1099 miscellaneous, so usually a 1099K. They're both the same in general. It just depends how the company processes it. What happens if you're an employee, your FICA, which is Medicare and Social Security, is taken out of your paycheck automatically every pay period, and if you're an independent contractor, it's not. Additionally, if you're an employee, you also get unemployment insurance, which is paid by your employer. Now, if you're an independent contractor, you're technically both the employee and the employer of your own business. which means you have no taxes taken out. So all the income tax falls on you to be taken out at the end of the year. You need to pay the full FICA amount, which is 15.3%, while if you're a W-2 employee, you only pay half of it, which is 7.65. And more importantly, there's no unemployment insurance, meaning if you lose your job or your car breaks down or you can't do anything, you can't go to your state unemployment insurance and file for unemployment because no one's paid it.
Okay. Thank you for that. The way that I usually think about this, guys, is if you're an independent contractor, you're basically an entrepreneur. You're a small business, and you're receiving income from a partner like DoorDash or whoever else you might receive income from, and you incur your own expenses earning that income. Right? You're putting real money into your car and other expenses like that. And so the name of the game is to figure out what your actual earnings are after expenses from that. And so being an employee, of course, you can't write off those expenses because your employer is doing that. Okay.
Alex, you're completely right, Alex, about it. And that's one of if you know how to use and write your expenses properly, being an independent contractor can save you a lot of money.
All right. Next question. What expenses should I track and deduct?
It all depends on which job you have. And for DoorDashers, the most important thing is mileage. In my experience, when I'm dealing with a lot of independent contractors, mileage is one of the biggest expenses that they'll have and one of the most important things to track. It also allows you to deduct one of the highest amounts. Another thing that you would want to do is food. I mean, if you're eating, then you should be able to do it when you're driving around and you need some food and all that. That's a legitimate business expense. Parking, if you need to park somewhere, that's a legitimate business expense. Tolls, a legitimate business expense. You use your cell phone, that's a legitimate business expense. How much do you use your cell phone for work and personal? You should find your percentage based upon how you feel you're using it, 50%, 70%, 80%. I sometimes go and I look at the amount of minutes compared to the total minutes that I do, or how much I use it for data versus my data on time-wise, and then I use that percentage to deduct. So a lot of times in your situation, if you're doing DoorDash, it can be 50% would make sense. You can even go up to 60 or 70%, but that's a legitimate expense because you're technically using that to make money. I mean, none of you can actually drive around without your phone. So you need it to make money. Another expense that you can technically do is what's called the home office expense. That's an expense that basically allows you to use part of your home to deduct a certain amount of money. Usually the easiest way to do it is the IRS says how many square feet of your home do you use, and then you multiply that amount by $5. Within your Schedule C, there's an area that you can do that. So if you use a room that's 20 feet wide for that, you can deduct $100 a year for your home office. So those would be the major ones. But as I said before, when you're working in DoorDash, the most important thing to track is the miles, because what you get from them doesn't always include the total amount of miles that you do. I mean, when you're driving from your home to your first pickup, that's a deduction. Once you drop it off and then you go to your second pickup, the company doesn't count for those miles. But those are miles that you are driving and you should be able to expense it. That's why having a app like Everlance is very fundamental, because it doesn't it's not about spending the money. It's about saving and tracking a lot of expenses that you won't have in any other way.
Yeah, Yotam, that's a great point. And one question we get sometimes is, hey, doesn't DoorDash track these miles for you? And you might have some of your miles tracked by DoorDash, but as Yotam mentioned, the name of the game is to record as many miles as possible, so you pay the least amount of money in taxes. And miles that you might not record at DoorDash include right when you get in your car and you drive to the grocery store for the first time. or you're in transit, and you want to make sure that it's comprehensive of all those miles, because those are definitely miles that you do in pursuit of your job, and you should get credit for them. So I want to move on to the next question. One of the questions we've gotten is, hey, how do I actually file my taxes as a DoorDasher? I'll let Yotam speak to that, but it's pretty similar to filing your taxes normally. But of course, now you need to do something called a Schedule C, and I'll let him talk about that here.
Okay. What happens is, it's one of the advantages in, I would say, a quirk in the U.S. tax system is that if you get a 1099 miscellaneous, you immediately, that form needs to be filled out in the Schedule C. Now, the Schedule C itself is a form that's called Schedule C, Business Profit and Losses, which means that the minute you get a 1099, you're legally the owner of your own business. Remember, everybody always says you're an independent contractor, you're an entrepreneur, you're your own boss. That's because legally on the tax form that happens. Now, what happens is when you do that, you need to put your Schedule C, you put your 1099 miscellaneous or 1099K on the top side of the income of the Schedule C, and then beneath it, you start putting your expenses. And then at the bottom of the Schedule C, you have your net income, and that net income goes onto your 1040. Now, on the 1040 is a regular tax form that we all do. This is what you see in front of you now is a Schedule C, the first part of it. And if you can see in line 1, that's where you would fill out all your income. Usually what they would have is supplemental forms and how you would fill out your 1099 miscellaneous, and you just copy box 1, box 2, all the information onto it, and that's what it would happen. And then you'll have your income. Beneath that, we don't have it here, you'll have all your expenses. So your cell phone expense would be there, your home office expense would be there, your car expense would be there, and all of that. And only after you finish your Schedule C, then you go. Now, one other advantage that you do have, one before you get to this slide, is if you actually pay for your own health insurance, there is a section within the 1099, within the Schedule C, that allows you to deduct part of the payments that you pay for your own health insurance. Cool. So those who buy health insurance from the marketplace and get a 1099 HC, 1095 HC for their health insurance, you can actually deduct part of that amount through your business.
Super helpful, thank you. And guys, the way I understand this, being more of a layman and not a tax expert is, look, when let's say you used to earn $100 from an employer, you need to tell the IRS you made $100 from an employer, and then it has a tax rate and you pay taxes on that, right? It gets more complicated when you're self-employed because you might have made $100 from DoorDash, but then you're trying to tell the IRS, but I spent $30 making that income, so it's like I only really earned 70 and I should pay taxes on the 70. So the Schedule C is kind of the form that helps explain that to the IRS, and then Everlance and other tools helps you sort of provide documentation around, yep, I actually did spend this money and it was a valid business expense.
If I might add another thing to that, Alex, is that if you make a mistake, let's say with a W-2, that information gets sent to the IRS. So they know exactly what you have. But the IRS also receives a 1099. So if you do not fill out the Schedule C and do all the deductions and all the expenses, the IRS is going to assume that the total amount that you made is also the total amount of profit.
Yep.
So being able to fill out the Schedule C lowers your total amount that you need to pay in taxes. Otherwise, the IRS is just going to say, you made this amount, you had no expenses.
Yeah, one quick question we got, Yotam, from Neighbors J is, what if you have health insurance through an employer? What should you do?
If you have health insurance through an employer, actually, it's when you fill out the health insurance form, it's 1095 HC. It's a supplemental form. You will say that you have received it through the employer, and that's it. And as such, you won't be able to deduct it through your Schedule C because it's not a legitimate business expense.
One other quick question. We're coming rapid fire here. Is
fine, no problem.
Is if you didn't make $600 for the 1099, this is from Crystal, do you have to file anything? So you made less than $600.
Yes, you do. The reason I say you do is because while it isn't reported, it's important for you to do it. Will the IRS look into that? They won't get that information. So it's not as if you're going to suddenly come out and have that, because they don't need to report it. As a business, if someone makes less than 600, you are not legally required to send a 1099. However, on your side, it would be good for you to do it for a number of reasons. One, if you're starting the business and continuing, you might have had expenses that you can actually go down and lower that income. You might have even a loss on that year because you drove more, which could offset an income from another side. And in general, I'm a firm believer that any type of income that comes from actual work should be put on your tax forms. Now, if you made $500 and you spent 500, you're not going to get taxed on it.
Yeah.
If you spent 500 and you made 20 and you only made $20 on it, you'll only be taxed on $20. But adding that extra form, I'm a believer that it's worth it.
Okay, that's helpful. And in the interest of time, I want to make sure we can get to everyone's questions, but first make it through all this material. I'm going to pause on some of the questions and go to this next one, which is, how do you deduct your car expenses? Should you keep receipts?
Car expenses are basically, they're done in two different options. And this is what I actually like about Everlance, because it actually solves the main issue for both options. The IRS basically comes and says, we have what's called a standard rate or an actual expense method. The standard rate, what it does is it basically says, we want to know how many miles you've driven over the year. And then the IRS basically does a calculation for an average fleet for cost per mile. That would include gasoline, car payments, depreciation, insurance, registration, maintenance, all the stuff that usually people spend on a car. All that gets included, and the IRS comes out with a specific number. 2018, for instance, is 54.5 cents. 2019, it's going to be 58 cents. So they do that. Now, what that allows you to do, if you decide to keep the standard rate, you don't need to keep any receipts of anything. All you need to do is just have a track to be able to keep track of all the business miles that you've done. Once you have a record of the business miles, then you can say, okay, this is the amount I've driven. You multiply that by the IRS amount, and then you can expense that amount. The other option is what's called the actual expense. And that way, what they do is they say, okay, we want you to keep track of every expense that you made. Car payments, gasoline, registration, oil filters, oil changes, insurance, repairs, every payment that you've done related to your car, you add it all together. Then what you do is you see how many miles you've driven for the full year and how many of that is business, and you find out a percentage that it's business versus personal, and then you multiply that business percent amount by the total amount. Make sense?
Yep.
So those are the two methods that the IRS uses. Now, right here, as you can see, it's an example of how it would be. So here you have someone who drove 3,680 miles for business in 2018. If they do the regular standard deduction, they have 3,680 miles times 0.545. They come to deduct 2,000 and something. I can't see. I have a face in front of my amount. I think like 2006, something like that. Right?
That's right. Yep.
I just have some slide. 1 second. 2005.6. Okay. The other option is using the actual method where they calculated the total cost, which came out to 1,750. They did business of 44.202% of the miles was business. So they multiplied the total expense of 1,750 by 44%, which came out to 770. Now the IRS basically says you should do both of these methods if you want, and you can deduct the one that's highest. They don't say you need to do the average. They don't say you need to do the lowest. They basically say the highest you're allowed to do. So in this situation, using the standard rate is the best rate. Now, in my experience, and I've done hundreds of people with miles, I don't think that I've ever hit with, except people that are dealing with luxury vehicles and really trying to play around with the IRS. For that, you'd actually need to deal with CPAs and all that. The standard method would always be the best way to do it. Now, the thing is, both methods require you to keep track of your personal and business miles. Because as you know, as you saw, if you go up like 3 forms and slide 13, can you press slide 13 for a second?
Mm-hmm. One quick question on this. Yeah. Someone was asking, what if you pay for your car with car payments? Can you deduct your car payments?
No. The car payments, unless you're doing the actual method, the car payments goes into the actual method. Car payments, gas, insurance, everything.
And is a car the interest on the car payment, or that's all the same?
As well, everything. Everything goes in. The standard rate includes everything. The only thing that the standard rate doesn't include, which you can add on to it if you're claiming your car, is parking. If you need to drive, if you have tolls, okay? If you drive Uber or Lyft and you're required, let's say, to keep the car clean, then cleaning your car would be considered a legitimate expense. But other than that, anything that has to do with the car itself is included within the standard rate.
Yeah. So it sounds like, my understanding is almost always it's better to just do the standard rate. It's easier. You're going to save more money. But one question we have is, which miles count as business? So what counts as a commuting mile? Like, which of my DoorDash miles can I write off and claim?
Okay, I'm a very firm believer in being flexible when it comes to certain amount of miles. I've talked to a number of CPAs over time to get the correct answer, and even within them, they have a certain amount of one says A, one says B. My belief is very simple. If it's business related, it's a business expense, point blank. If you are driving to pick from home, to pick something up, to deliver, that's a business expense. There's no way you could get there if it wasn't related to business. So if you're driving, the minute you get into the car, so the way I would say it is this. If you're going into the car and you're going to spend the next 5 hours doing DoorDash, everything within those 5 hours is a business-related expense. Now, if in the middle you decide to go home and take a nap, well, that's a different story. But in general, as long as everything within that business environment, then you'll consider it's a business expense. In the way I look at the business is, is the action that you are trying to do is a goal to generate an income. That's kind of what the IRS considers a business is the action that you're doing is the intended goal to make money. That's the way they look at what income is, what is a hobby or leisure and all that. So if you're going into your car with the intent to make money, that I would consider a business mile.
Okay, I want to have a speed through to the end here, and then we can answer questions.
No problem.
Let's go to this, and I guess a related question though would be: do parking tickets count? Or what about
legally, no. I've seen people kind of sneak it in within their expenses, but legally, anything that violates the law is not tax deductible. Does that make sense?
That makes sense. What about parking?
Like, I've seen people do it. I'm not saying I haven't. Okay, I've seen people basically put parking tickets into it. but in general, it's not allowed.
Okay, but what about parking? What about like a parking garage?
Allowed.
Okay.
If it's parking so that you can generate, like if you go somewhere and you need to park so that you can pick food up or deliver food or put money in a meter, that's legally allowed.
Awesome.
Like, I mean, that's part of the business. The thing is, that's not parking and tolls are not part of the miles because those are completely separate.
All right. So rapid fire. What about this? The top questions for 1099.
Okay. Well, if you get let me move my screen a little bit. If you make less than 600, I would file yes. It's more because you can actually get advantages by putting some expenses on the business. So it basically allows you to pay some pre-tax expenses. I mean, at the end of the day, when you're an independent contractor, every income that you pay comes out to about 25% taxes. So every dollar that you put as an expense, you actually save 25 cents in taxes. So if you made $500 and you just don't report it, that's $500 that you could have paid and saved that in taxes. So it's a weird situation, but that's kind of the way I look at it. If you have multiple jobs, yes, you can put all your 1099s in one thing. Now, it also depends which kind of jobs it is. I mean, if it's completely different categories, sometimes you'd like them different. So if one of them is from an actor and another one is from a driver, you might want to separate the businesses. Okay, just because one has different expenses than the other, and it even says in the top part of the 1099, there's a code of what you do. However, the IRS does allow you to combine all of them together into one if you really want to. They won't look at it differently. I mean, if you have 4 different 1099s, or if you have one, the bottom net income should be the same on your 1040, no matter if you have 1 or 4. Okay? If you have a W-2 and a 1099, all the taxes go in the form 1040. The Schedule C, where the 1099 goes, is a supplemental form, where the net income goes on the 1040 itself. Okay? So everything falls on the 1040. You don't do 2 for taxes. You only do 1 file of taxes where everything falls in it. Your health insurance, if you have an investment income, if you made unemployment insurance, if you get Social Security, if you get stuff from the Army, every source of income needs to be put on the 1099 on its own place.
Great.
And once you have all of that, I'm sorry, they all go on the 1040. So you only do 1 file and everything falls on the 1040.
Okay, so DoorDash is partnered with Payable. So if you have an account with Payable, you should be able to get your 1099 by January 26th. So you should have it now. So make sure you check that out.
Or just one clarification there is DoorDash sent you an email last week asking you to set up an account with Payable by January 26th. So if you did that, then you can log in now and get it. If you didn't do that, then it's too late to get it online. You should expect it by mail in the next couple of days. So look out for that.
Another quick question is, hey, should I expect to pay taxes or get a refund? So if you only did DoorDash or other 1099 jobs, you will likely have to pay taxes because you haven't paid any taxes yet, right?
Yes.
If you are DoorDash and a W-2, your employer is paying some of your taxes for you. They're withholding taxes. So maybe you get a refund, maybe you need to pay. If you're mostly an employee, that means most of your taxes have been withheld and you've gotten a refund in the past, and you do a little bit of DoorDashing on the side, you're probably going to get a refund. So why record your miles? We've been over this, but miles are really the number one expense for independent contractors, especially for a Dasher. It's really easy and valuable to do. So just use an app, whether it's Everlance or another app, really just go out there and do it. It's also one of the most asked about areas. So one of the questions is, why not just sort of figure this out on your own and sort of estimate it later? The IRS will audit your mileage log ahead of many other things because it is such a valuable deduction and it's so prone to tampering with, right? So that's an important thing to think about, how to track your miles automatically. Of course, that's the product we built, so we'd love for you to use Everlance. We're also really happy of DoorDash has gotten a really great deal for their Dashers, so you can get Everlance You can use Everlance for free all the time, but we have a premium product that you get months of for free as well. Finally, discounts on taxes. So DoorDash and Everlance have a partnership with TaxAct, so you can get 50% off there. Use their self-employed version, or you can file with an accountant. So if you have questions, I saw someone had a question about an S corp and whether they should, create an S corp and use that to.
It's a good question, actually, because I've dealt with a number of my clients in the past few months because of that. The change in the tax law has created a situation where an S corp could have an advantage.
So yeah, so questions like that, my guess is like DIY software is not going to cut it. You should speak with someone like Yodam, and he's been very generous in helping folks out with some free information today, but also here's his email address, and he can help you directly with a discount for Dashers. So there's this email. It's yotam@bythesquaretaxes.com. That'll be recorded, and we'll send an email out with that as well. But please keep that in mind. TaxAct is super cheap, especially after that deep discount. We will share the slides of this presentation, and that's really it. So I want to save a minute or two for any last questions before time expires. Everyone who has RSVP'd for this webinar will get an email from us with links to the webinar that's recorded, some additional resources, and discounted links to Yodam services and TaxAct. If you have other questions, be sure to submit them. And that's really it.
I mean, I saw a couple questions here that I could easily ask if you're interested.
Please.
I mean, one of it was I saw someone that said if your partner gets a W-2 or not. If you're married, you should file together. You shouldn't file separately. So you put it all in one. What else?
Where do you get the Schedule C?
Schedule C is actually, they just moved it. It's under Schedule 1. So what happens is you'll see it on you'll see it. It's called a supplemental schedule to income, which on your 1040 falls off. In TaxAct, what happens is when you're going through TaxAct, you'll actually be asked, do you have a 1099? The minute you say yes, it would start asking questions that would relate to Schedule C and how to fill it out. So in a way, a lot of these programs, a lot of these tax programs are very helpful if you don't know what you're doing, because they will take you step by step by asking questions. And with the answers, they will decide whether you need this form or that form. And when you answer it, they will automatically fill those forms out.
Here's a good question from Corey. What amount earned in DoorDash income would require me to submit taxes quarterly?
It's not about how much you earn. It's about how much you make after expenses. In my experience, it goes like this. Submitting quarterly is good to do because you end up without a gigantic amount of first needing to pay taxes come tax season. And second of all, you also have a penalty for not paying taxes on time. The penalty is relatively small. So if you're making $20,000 a year, the penalty can be $200-300 for not paying taxes. How much should you pay? I would say in general, a rule of thumb that I use is somewhere between 20 to 25% of your net income on a quarterly basis. So what you would do is you would see how much money you made in 3 months, take all your expenses out, take all your miles out of that, come out with a certain amount that you actually made as a profit, and pay about 20-25% of that.
All right, I think this is our last question, and feel free to email us, guys, from Christina. If you haven't been recording mileage, what can you do?
Basically, there's 2 options. One, you can just count on what they give you, and you're kind of screwed. That's why I like using tax mile apps. It's there's not much you can do about it. I had someone that basically I worked with. He used to drive into the city, and he was a salesperson, and then he would drive around the city. I knew every day he drove from his home to his office. So that drive I recorded. The stuff he did during the week when he drove to his clients, I couldn't record it. Now, what I also do sometimes is what you could do is you can do an estimation. It's not the best thing, but kind of would be allowed. So let's say right now we're in February. You buy you use Everlance and you do February and March. You see how many miles you've actually done during those 2 months based on Everlance, and then you would see how many miles you've done based on DoorDash. And then you would take that difference and you can actually multiply it by the amount you did the year. That's an estimation. It's not always, it could not be accepted by the IRS, but if you are showing that you have 2 months of proof that this is the amount that you've driven and this is the amount that they gave you, and you've driven for a full year, there's a good chance that they will accept that estimation. Because you're not estimating and saying, oh, I'm doubling it, I'm tripling it. You're actually estimating it based on facts that you have from a different period.
All right, guys. Well, that's it. One other question was, do you include tips? I'm assuming yes, you have to include tips. That's validating them.
Tips would be included.
And, round of virtual applause for Yotam. Thank you so much. We appreciate it. We'll send out an email. You have our email. You guys know how to reach us. And that's it. Hey, Ricky, yeah, the total company is 20 people right now. We're mostly software developers. So we don't have many folks in support. So it could take some time to get back to you, but we love hearing from folks. So let us know. Kimberly says, thank you. And Melissa says, thank you, Yotam. So thank you so much. This was really great, guys. So hope to do it again sometime. And we'd love to hear from you. Please don't be shy if you have any feedback for our app. We want to make it better.
And we also would love your feedback on the webinar. So I just pasted in this link here into the chat. Feel free to just click that 20 seconds of your time with any feedback would be awesome. And also right there, you can ask additional questions. We're going to take the most asked additional questions and try to answer those in an email later on.
And guys, if this has been useful, let DoorDash know. Because if DoorDash heard that's been useful, and we think it's useful, we want to do more of these kind of things, right? So that'll really encourage us and allow us to do more of these kind of events in the future. Thanks so much.